Meet Mike. Mike is a dedicated small business owner who has poured his heart and soul into building his company from the ground up. Every day, he juggles multiple responsibilities, from managing employees to ensuring customer satisfaction. He's a small business owner juggling the demands of running his company and staying on top of his taxes. Taxes are a crucial part of his business operations, and he knows that staying compliant is essential to avoid any legal troubles. Like many self-employed individuals, Mike pays quarterly estimated taxes and files his personal tax return each year. This means he has to be diligent about setting aside money throughout the year to cover his tax obligations. Mike is required to pay quarterly estimated taxes because he doesn't have taxes withheld from his income like an employee does. This system ensures that he pays taxes on his earnings as he goes rather than facing a massive bill at the end of the year. But what happens if Mike misses a quarterly payment? Missing a payment can happen for various reasons. Maybe he was too busy, or perhaps he simply forgot. Missing a quarterly payment, or underpaying, results in penalties and interest. The IRS doesn't take missed payments lightly, and they have strict rules in place to ensure compliance. The IRS charges interest on the amount not paid by the due date, compounded daily. This means that the longer the payment is delayed, the more interest accrues, increasing the total amount owed. The penalty for underpayment is typically calculated as a percentage of the unpaid amount, based on the current federal interest rate. This can add up quickly, making it even more important to stay on top of payments. Now let's say Mike does pay some of his taxes after the quarterly deadline but before April 15th, when his personal tax return is due. This partial payment can help reduce the penalties, but it doesn't eliminate them entirely. Good news, he avoids late filing penalties, but there's a catch. The interest continues to accrue from the missed quarterly deadlines until the payment is made in full, so it's crucial to pay as soon as possible. Interest continues to accrue from the missed quarterly deadlines until the payment is made in full. This means that even if he catches up before filing, the interest is unavoidable. While penalties might not apply if he catches up before filing, the interest is unavoidable. This is why it's so important to stay on top of quarterly payments and avoid falling behind. And what happens if Mike files his tax return and still owes money but doesn't pay by April 15th? This situation can lead to even more severe consequences. That's where the IRS gets tougher. They impose additional penalties and interest, making it even more costly to delay payment. In this case, Mike will face both penalties and interest. The failure to pay penalty is 0.5% of the unpaid taxes for each month the payment is late, up to a maximum of 25%. The failure to pay penalty is 0.5% of the unpaid taxes for each month the payment is late, up to a maximum of 25%. This can add up quickly, making it even more important to pay on time. On top of that, daily compounded interest continues to grow. This means that the longer the payment is delayed, the more the interest adds up, increasing the total amount owed. The best way for business owners like Mike to avoid penalties and interest is to plan ahead. By staying organized and proactive, he can ensure that he meets all his tax obligations on time. Working with a tax professional can help ensure accurate quarterly payments and a clear understanding of what's owed by April 15th. A tax professional can provide valuable guidance and help Mike navigate the complexities of the tax system. Remember, the IRS offers a safe harbor rule. If Mike pays 100% of last year's taxes or 90% of the current year's taxes through quarterlies, he can avoid underpayment penalties, even if he owes more later. This rule provides a safety net for those who might not be able to predict their exact tax liability. By staying proactive, Mike can keep his business and taxes in good standing, avoiding costly penalties and interest. This proactive approach not only saves money but also reduces stress and allows him to focus on growing his business, and so can you. By following these guidelines and staying informed, you can avoid the pitfalls of tax penalties and interest. Stay informed, stay ahead, stay stress-free. With the right approach, managing your taxes can be a smooth and hassle-free process.